All right, welcome back. This is the Something Ventured podcast. I'm Kent Lindstrom. I am your host. My guest today is Jim Scheinman. How are you doing?
Doing great.
It is so good to have you on the podcast. I was going to say have you back. I haven't had you here before. Jim has a remarkable career, and just telling the highlights of the career it's going on. Just the highlights of the career are amazing, so I'm sure I'll miss some details, but is the founder of Maven Ventures.
Yep.
Which maybe 1,000 people in the world can say they founded a venture capital firm. Was an executive at Bebo, which is the social network that had, I would say, the second most successful exit of any social network, I would say. Mm-hmm. Facebook did better. And was an executive at the first social network, Friendster, where I got to know him. So that's fabulous. You also have the honor of being the first guest since my most successful podcast, which was I did a review of sexual harassment in 2017. And went through, it was kind of astounding actually as I did the research for this, because we were talking about like men who lost their jobs and venture firms in 2017. Mm-hmm. And I started listing them out, and all of a sudden like, wait a minute, there were 8 different people. And so I went on the record as sort of like, just telling the story. I didn't disparage anybody or make any judgment on it. Mm-hmm. But that was a pretty extraordinary year in venture capital, like just from that particular perspective.
Yes.
Your firm, you have a female partner in your firm, right?
Yep. Sarah Deshpande.
That makes you one of like a couple hundred people.
Of a few.
couple hundred people in the world. That's fantastic.
Well, first of all, I'm delighted to be here, and thank you for having me on this great podcast. I'm happy to talk about my background.
Well, how did you come to venture capital? Like I know you were a lawyer and executive and all that, but you're entrepreneurial too. Like right. You were entrepreneurial before doing the later things that you've done. Am I right? Do I recall this correctly?
That's right. 20 years as an entrepreneur, 7 startups. Most of them failed, but a couple of them were big hits. So that's what you need. Yeah. I think when people transition from being an entrepreneur to an investor, there has to be a gut check, and you really it's a very different kind of job. And I think a lot of people think they're ready to leave operating or being founders of companies, and they try to invest, and either it's not the right time. Yep. I mean, I'll give you a great example. Like a good friend of both of ours, Josh Ellman, who was a great operator at Facebook, Twitter. Talk about what a great career in the product side. And then went to a great firm, Greylock, and then I don't know this personally, but then now he's running product for Robinhood, which is a great fintech company. Yep. I just wonder if like there was this sort of, he still got that entrepreneurial operator spirit inside, and it's very, very different work being at a venture firm. Yeah. Where we meet 2,000 companies a year. We'll invest in 6. Yeah. And then we'll work with those companies very closely. So for me, in 2008, after we sold Bebo, I decided I wanted to try this, and I went to CRV, which is a great firm, for a year as an EIR, an entrepreneur in residence, and I was just lucky to be there at the time when we were evaluating Twitter, and I helped the team look at Twitter, and we did the deal. It was a very successful deal, and I realized, well, number one, I'm good at this, and I like it. But 2, that a big firm wasn't really a good fit for me, so I just decided to do investing on my own for 5 years to make sure that this was the right thing. And I think I give that advice to a lot of entrepreneurs that want to be investors. Say, just do this for 3 to 5 years on your own. Like, see if you're good at it, and if you like it, and if you can get into good deals, and you can help these companies succeed. Yeah. And then I raised my first fund 5 years later after I had a 10x fund on my own as an angel investor. I said, okay, I'm pretty good at this, and I can do it. Maybe I can do a little bit larger scale, and it's been growing ever since. It's
I don't know if you've ever heard Gil Pinchina tell the story. One of the great, really good angel investor. Yeah. But he talks about how he had a little bit of money from eBay, and he invested in 10 things, and he's like, I'm going to lose all my money, but I'll learn how to do this. And people are like, you're crazy. Why are you doing this to lose all your money? And then I think one of his investments was LinkedIn, and one of them was Ironport, and like the rest is history. Yeah. And Josh Felser says that it was kind of it's an emotional thing, because his point of view, unlike Josh Ellman, was this is it. Mm-hmm. Like, I'm not going to start another company again. Mm-hmm. I'm going to work with the same partner. I'm going to work with entrepreneurs, but I'm not going to found another company. And he'd done two successful companies. Yeah. I mean, did you experience that element of it, or were
Well,
you
in
like,
some
screw
ways-
this, it's hard running a company?
Yeah, no, I mean, I have obviously being in 7 startups, I have a lot of respect for founders and being a founder and an operator and entrepreneur. It's definitely the hardest work you're going to do in your career by far. I think it's in a lot of ways much harder, pressure-wise, time-wise, commitment-wise than venture for sure, but anything. Yeah. It's also probably the most rewarding work you'll ever do. Yeah. The highs and lows are like nothing else. And so for me, starting Maven Ventures was being entrepreneurial. I mean, that was my next startup, which was great. Yeah. It was also, once I did in 2013, I said, this is also my last job in a way, right? I'm not going to do anything else after this. This is the next 20, 25, 30-year career. But it feels very much like a startup. Sarah and I, we have, we're like VC nomads. We have office space, but we're not really ever there. We're always on the road. We're always working with our startup founders. For me, the balance, I realized I wanted to be super early. Like we'll invest with 2 people and an idea. Sometimes I have an idea. I want to bring that to the world. Happen to find the right founding team thinking about something similar. That's like feeling still like a startup entrepreneur. Yeah. Of course, I'm not a co-founder. I'm not operating the business. But for that first year, I guarantee you we're always the most helpful and involved investor. That's because that's what we want to do. Right. And that's what we love to do. And that's what I think one of the reasons why our companies are so successful.
And what was it like moving from, this whole sequence, first of all, what was it like when Bebo gets acquired? Mm-hmm. Bebo, people should know, although people all over the world listen to this podcast, one of the things it is bring Silicon Valley to people living in Europe and China and get feedback from them all the time. So Bebo was one, there were a few social networks around, and there was a theory at the time that maybe there were going to be like 3, everyone makes fun, AOL acquired Bebo for nearly $1 billion. And people kind of make fun of them like, oh, it was a bad deal because it didn't work out. But at the time, there was kind of a theory that there were going to be 3 social networks. Maybe there was going to be a European one and an Asian one, college one. That was Facebook. Now, Facebook kind of dominated the world. Right. But Bebo was one of the bigger exits in Silicon Valley, maybe?
Yeah. So,
what
by the way,
like to be there?
As a reminder, it was a 3-year exit, 2005 to 2008, almost $1 billion.
And a small,
we were like 30 people. Yeah, tiny company. Look, the thing at the time, Bebo was the number 1 social network in English-speaking Europe. That was always our strategy. It's like, we're probably never going to catch up to Facebook and MySpace here in the U.S., but being number 3 here was very interesting. It was still a very big business in the U.S., if you were a 13 to 22-year-old in Ireland, Australia, New Zealand, UK, you were on Bebo 24/7. There was no Facebook. Right. Facebook didn't exist in those countries. Right. It was like a game of Risk. We owned that territory. Yeah. But it became pretty clear that, at least to, I think a bunch of us in the executive team, this is probably going to be a zero-sum game. Like the network effect is so powerful that either Facebook has to buy us and we're going to be part of that, or we need to figure out how do we scale this or have a much larger parent to be able to fight that fight. And then one thing led to another. And by the way, there were like 6 companies AOL size that were interested in Bebo because Facebook had made it clear by ripping up, Zuck ripped up the Yahoo offer $1 billion. They were going to go public. MySpace had already been acquired by News Corp, so we were number 3 by a long shot. So if you wanted to own a U.S. social network, we were the only game in town. And we had this really interesting, very profitable advertising business in the UK, Ireland, Australia, New Zealand. Right. So like it was, we were making money. Right. I think, it was an interesting play for not only AOL, but a bunch of other companies. So, there was a lot of price pressure. That's why it went from, I don't remember the original offer, to a much, much higher offer down the road. And well, people think that it wasn't successful at AOL. Actually, again, this is just getting to the weeds a little bit, but I just want to remind people that it was very successful on a lot of fronts for AOL. They were going public again, and this was their story. Right. And the deal helped them get billions of dollars in valuation, market cap valuation, so it paid for itself. Now, whether they actually ever intended to run it or not, we fully vested in almost the whole team left. Right. There was, even the brilliant leader Michael Birch. They didn't have him under golden hand. Like they let everyone go. So you wonder, what was their original plan? I don't know. Yeah. So I wasn't on the.
How does that feel personally? Because I get the sense in Silicon Valley that we all, Silicon Valley kind of operates because everybody pretty much overestimates their probability of a big win. Like everyone thinks they're pretty much going to start, a Facebook or an Uber, or that's like 10% of the companies. Yeah. And that's like 1 out of 10,000 of the companies. Did you have a sense for that you were like kind of one of them? Like
at the time when we started it?
No, when you exited it, when it happened, were you kind of in shock or like, what does that feel like?
Oh, it's an amazing feeling.
Yeah.
I mean, listen, before that I had been at two very, I don't know what you like, as close as you can to those kinds of experiences. One of them with you at Friendster.
Friendster, yeah.
That was $100 billion idea. We knew that.
Yeah.
Right. And, going in the office, working with you and the team, like every day, knowing that we were so close to something so special, but that we couldn't get the site working, or there were some bad decisions and internal fighting, whatever it was that caused the company not to be the Facebook of what eventually Facebook became. It's like that. You talk about the bottom of the low, right? And then to experience something like a Bebo, where you're very lucky, you timed it so well. Like the market crashed 3 months later. Literally, that deal could never have happened. But, being on both sides gives you an even greater appreciation. And by the way, before that, I was at a company called NBC Internet, which is a great company. We went public. We were NBC's television station internet division in 98, 99, 2000. We went public, and then boom, the Web 1.0 crash happened. We went from $6 billion public market before we could sell, because we were in the lockup period, down to $500 million overnight, literally overnight. And fortunately, we sold it back to GE, and we all made a little bit of money, but not nearly as much. I mean, again, I had that taste. I was there.
Yeah.
And then it's gone.
Yeah.
And then Friendster was the next thing. And then I was there again.
Right.
And it was gone.
Right.
And so then you wonder, like, what kept me going? Like, why didn't I just quit and go somewhere and do something different? Right? I don't know. Yeah, that's part of the entrepreneurial.
Well, it is funny. There is a concept that that I've heard from some people now, to maximize your wealth in Silicon Valley thoughtfully. What you should really do is not be a particularly big executive, or not really start a company. Just go be like the assistant counsel at a rocket ship. And then you see these people who are like, okay, they were 4 years at Google,
right,
and they left. But if you leave and you're the assistant counsel, no one gets mad. CEO can't quit,
right.
And then there you go to Facebook, and they're there for 4 years, and it's probably a crappy job. And then all of a sudden they've strung together like 4 $12 million, exits at 32, and maybe not had
massive hit, but it's a safer, quote unquote, safer way to accumulate wealth. For me, I think the reason why I kept going, as I'm thinking about it out loud, but and it's something that we do a lot with all of our Maven founders, and only companies that we invest in, like we'll do 4 or 5 or 6 investments a year. Every single company has to have a vision worth fighting for. So, it's maybe more about that, like trying to bring to the world something that's going to do something positive, that's also going to be a great business, is what drove me as an entrepreneur and what drives me as an investor. And so, back in the day when, like, for example, NBC Internet, well, we were a search engine. We're competing with, pre-Google, Yahoo, and Excite. And the idea was that if we can use this new thing called the internet to get you more information, that's a big idea. That was exciting.
Right.
Then we got acquired by NBC, and all of a sudden became this like television advertising thing with a search engine. At the time, Snap, when the company that I helped, I was started, 30 of us started Snap at CNET, and I was, lucky to be involved very early there. That it was a very different vision. That was like, it was pre-Google, right? That was a big idea. And so then, when you and Jonathan were telling me about Friendster and this idea of like connecting people, we just came up with, like, social network was a new made up word that we can't, but the idea that you can stay connected with friends across the country, across the world forever, and maybe solve a problem for a lot of people called loneliness. That's a $1 trillion idea. Like, that's exciting. Right. And so unfortunately, like, Friendster didn't work, but I didn't want to give up. I saw this opportunity with Bebo. Right. So I think if you really do think about that, and you're thoughtful about the kind of businesses you're starting or you're working with, and they're mission driven, that speak to you, you're going to be successful. You may not make $1 billion exit, right? But you'll most likely be very happy in your career. And if you're really lucky on top of that, you could have a massive exit.
And you get to do this. Like, you get to wake up every day, and maybe Friendster would change the world. Who knows?
Yeah.
I mean, it is funny when you look at the backstories, like kind of judging venture capitalists. Like, you had that perspective that this could change the world. People are connected. The end of loneliness, maybe what ham radio used to be a long time ago. But many investors we talked to, if the numbers weren't there, very authoritatively would tell us, like, nobody's ever going to put their profile online.
Right.
It's like with the Ballmer story, like, well,
Right.
maybe the world will need 1 or 2 personal computers, or 5 is the
Right.
total market.
Right.
So many people had these really thoughthtful reasons why
It was never going to work.
Never going to
By the
happen.
way, yeah. So I mean,
venture capitalists.
I learned
too,
a lot
who
from.
are supposed to be.
I
guys.
agree. Look, most venture capitalists don't have vision, unfortunately.
Yeah.
Now they see something working, and they can understand how to take that little spark and make it grow to a very, very big business.
Or they have money.
And they have money, and
Yeah.
they can do that. But look, the venture business it's a risky business, but one of the tricks of successful VCs is you try to de-risk as much as you can,
Yeah.
and that doesn't necessarily take a lot of vision. With that said, I think at least where we play in Maven is it's all about the vision. It's all about seeing before most people what the consumer trends are. And I'm glad you brought the Friendster experience about know whatever put information on the internet. That was one of the most important lessons I ever learned. Right? I remember when I saw Friendster, it didn't necessarily speak to me. At the time I was married with a couple of kids, and Jonathan gave me access to, like, there were 1,000 people on there. It was tiny, right? Yeah. I said, but let me, I actually had someone in my office at the time who was much younger, and she was single. I said, why don't you use it and tell me what you think? She came back after the weekend. This is like 2 days later. Yeah. And I said, what'd you think? She said, changed my life. I'm like, what? Wow. What, really? Like 1,000 people on that? What happened? She goes, I reconnected with a friend I hadn't talked to in 10 years, and I got a date next weekend. I'm like, okay, I don't have to be brilliant to see that this could be something really powerful. If millions, or I think that I couldn't even imagine billions of people being connected at the time, but if millions, or certainly now billions of people connected, what could happen? So that was my lesson with 2 things. Number one, I'm not always the market survey, right? And most people are going to get the vision wrong for consumer products because it just seems so creepy. Mm-hmm. I remember telling all my friends, and I grew up in New York, and I was like, you guys, you got to try this Friendster. It's unbelievable. You put your photo online and put your information. They're like, are you kidding me? Right. I will never, ever, ever do that. Someone will come steal my kids. Of course, 5 years later, everyone was doing it on Facebook. And so, it's been very instructive for me as I invest in companies like self-driving car companies. Before anyone ever thinks it's going to be here in the next 50 years, I said, no, it's going to be here. It's going to be here much sooner, and definitely creeps you out because it's something so different. Yeah. But that's okay. It's a product that's going to change the world in a positive way. It's going to make almost everyone's life better, and it's going to be cheaper and better for the environment. We're going to save 1 million lives a year. This is a vision worth fighting for. Yeah. Right. So like, the Friendster experience was very instructive for me as far as how I invest going forward.
It's funny. There have been a few shocking ones where it's happened sort of within our lifetime, within like a few years. And social networking was one where suddenly literally every single person is on the same thing. Maybe not self-driving, but Uber was another one.
Absolutely.
Where I first saw it, I'm like, okay, it's a high-end thing for fancy Silicon Valley dudes. There's 2,000 of those. So
right.
And then all of a sudden they made that pivot.
Well, so here was the thought process of most consumers, which was, are you kidding me? I will never get into a vehicle with some stranger to drive me around. I would never. And then when you think about it, well, you do that all the time. You go to taxi drive. You don't know the people.
And that guy's
and they're not any better driver, right?
Yeah.
So like, and then the truth is, if it worked at scale and it was much cheaper and much better to get that product to you than a taxi, of course you're going to use it. Yeah. Like, you just have to take that initial fear factor that most people have for something new in consumer world and say, okay, but let's put that aside for a second. If this is actually going to work and it's going to save you money, it's going to be a better product experience for you, and it's going to make your life better, of course you're going to do it. Yeah. Airbnb, we were talking about that earlier.
Airbnb, and that's one. And at the time, and two, you have to remember, well, I'm preaching, but that these things, they don't take the form they start with. Mm-hmm. So when Airbnb, when I first understood it, is like, oh, you can rent out a spare bedroom in your house, you're like, I don't want some dude in my house. Right. But then when it became, hey, it's 2008, and if I don't, I'm going to lose my house because I can't pay the mortgage. Mm-hmm. Or, I have a, property that I can't rent for a year, but I can rent it day by day and make twice as much money. Right. Then you kind of go, oh, yeah, once people are making money on something, you've got eBay. Right. Once people's livelihoods depend on something, it's a pretty big deal. Yes. And that happened with both those companies, but both those companies, VCs authoritatively told me why they were never going to work.
When we invested in Cruise in 2012, right? Like I saw the vision of self-driving cars in 2011. Yeah. And the only question was not if it was going to happen, it's just how soon.
Yeah.
Right? In the early stage venture world, you have to be careful. You can't invest 10 years down the road. It has to be something that can come to, in its scale in the next 2 to 5 years. Let's say the 5 would be on the long end. And so I was thinking a lot about it. Could it be in the next 2 to 5 years? It's possible. I talked to every smart VC, Series A investor that I knew, and they all said the same thing. It's either not going to happen in a lifetime, or it may never happen. The regulatory issues, people are going to be too afraid, and over and over again. And then I was very fortunate to keep my mind open to this possibility. And then I met Kyle, who started Cruise, and I got his vision, because I was thinking about it, and he was absolutely right. Like, this was not only going to happen in our lifetime, but it was going to happen much sooner than most people think.
Yeah.
And we were one of the few investors to invest in the seed round. We did all 4 rounds. I'll tell you, it was really hard to raise that A. Nobody thought it was going to happen.
Really?
No one wanted to touch that deal. Nobody. I'm not going to name names, but you can imagine every who's who of the Silicon Valley best firms, nobody wanted to touch that deal.
Yeah.
Now, of course, everyone, and that was raising $20 million at $100 million. Now everyone's investing $100 million at $500 million valuation in the Series A.
Right.
Right. And that's, that's part of the business. Like, a lot of the Series A VCs don't get the vision, but once they see it, they're like, oops. And they've got the capital, and they can invest in, much later stage, or, 2 or 3 years down the road.
Do you think it's changed in Silicon Valley that there's fewer visionaries? It feels like there used to be more people like, Jonathan Abrams, who founded Friendster. Nobody was starting businesses. He idolized people like Steve Jobs and Mark Andreessen. And, they're alone in his bedroom. He's like, I know this will work.
Right.
Today, I feel like I meet a lot of entrepreneurs who kind of like, they want to be rich, and they're trying to kind of come up with some idea, and you can tell they're not really passionate about like customer service software, but that's their thing,
right.
And they, No,
I think there are as many, if not more, visionary entrepreneur founders, but there are a lot more entrepreneurs, right? So the pool has grown dramatically. So the chances are that you're going to see a lot of really crappy ideas, or entrepreneurs, or like people who should not be doing this. Yeah. But if you do this for a living, like we do, and you see 2,000 companies a year, you're going to find those diamonds in there, and right. And you just have to be very careful. At least we do. We're very careful about the founding team and the vision. That's what we invest in. If we don't think it's an idea that could be $1 billion company that's going to do something positive in the world, we just want to invest. Yeah. So they're there, but it's noisier.
All right, guys, we'll pause it there. My conversation with Jim Scheinman. Keep it to 20 minutes. I know you guys want to get in and out on these podcasts. Thank you, Harry Stebbings, for setting the standard at about 20 minutes. We'll hear the second part of this podcast, my conversation with Jim Scheinman, next week. Thank you so much for listening. This is the Something Venture podcast. I am Kent Lindstrom. See you next time.